Okay, so now we've finished 2 rounds for the simulation, and I have the charts up for net profits per team. And we can see that in round one, the average net profit or so was around 40 million, and now it seems to be about maybe 55 million. And we have a number of teams that jumped up. This team is 70 million is the highest, which is fantastic, amazing. Um, This team is 64 million. That's actually 69.9 million. And we have 66 million, 64 million. So a lot of teams figured out how to make a huge amount of net profits, increasing from round one to round two. Now, if you aren't making more than 50 million in net profits, you really need to revise your strategy of how you're playing this simulation, because other teams are eclipsing you in their profit generation. Okay, so let's move on to points per team. Okay, so let me explain something in points per team. The first round, you're taking over this company from a poor management team. So everybody generally usually gets very high points the first round. Now that you established yourself and your high level of proficiency in round one, round 2 points always tend to be lower because they're based on year-over-year percentile change, as you can see from the overview page. Now, some teams did very well. Remember, you're trying to average about 400 points a round. So if you got 900 points in round one and then 170 points in round two, you're still averaging about over 500 points, which you're still doing very well. You're ahead of the game. Now, some teams who didn't do as well in round one did much better in round two. Again, because you're competing year over year. So as you make a course correction and you optimize your competitive position and your decisions, you will do better in points. So it's not a steady, consistent, same points every round. Your points are going to fluctuate depending on how much better you do in the next round over the previous round. So don't get discouraged if you didn't make tremendous amounts of points in round two. Round two is often a difficult round to get very high points in. So it's going to be a process to get to round six. And some rounds you do very well with points, and some rounds are rounds where you're building the company, you're investing in the company, and your points aren't going to be as high. So that's to be expected. And to really test out how the points are distributed, you need to play the practice game. So if you're worried about your points, you don't think you're doing very well, play multiple rounds of the practice game, and then you get to the end of the practice game, you can reset and go back to round one and do it again. So the practice area is where you can think about your corporate strategy, how you're going to compete, and test it out. Something most executives don't get a practice round. So you get them in this simulation, use them to help perfect your competition. Okay, so if we look at stock price. Okay, so we have last round, MAK Autos had the highest stock price. And this round they're in third place stock price, and JU and DU Auto has number one stock price for $31 per share. So what makes stock price go up? Well, just like in the real world, if your profits go up, your stock price goes up. If your revenues go up, your stock price goes up. If your earnings per share goes up, your stock price goes up. How do you get earnings per share to go up then? And that's probably the most important contributor to stock price is earnings per share. How do we get our earnings per share to increase? Well, we have to have more net profits, or we have to have less outstanding shares. So if you buy back your stock or retire some stock, you decrease the amount of outstanding shares and you can increase your stock price. That's what a lot of companies do. So we have a nice bandwidth between $31 and $10 per share of how companies are performing in their stock price, which pretty much, when I look at this simulation, does match your performance in profits and profit margin growth. Okay, if we look at sales per team, so the number one team in sales is not the number one team in points or profits. So sales are great, but like I had said before, if there are two companies, one has $1 billion in sales and one has $100 million in sales, which company, they're going to give me one of these two companies for free. Which company would I want? And most people might say the $1 billion company in revenues. But I would say, okay, tell me the profits of each company. And say, okay, the $1 billion company in revenues has $500 million of annual losses, and the $100 million company in revenues has $50 million of profits every year. Okay, I want the $100 million company because sales are just that, sales. Not every sale is profitable. So you have to make sure if you're really good at making sales, like these companies here are really good at making sales, figure out a way to translate that into higher profits. You know, one example is you can get top sales by overinflating your advertising budget, but if you advertise more than the profits your cars are making, you're not going to have a profit. Just like I remember a student was doing a project and they were advertising, their project was a Subway store, and their advertising budget included $1 million for advertising in the Super Bowl. And I had a discussion with the student and said, like, you're a local Subway franchise. If you spend $1 million advertising in the Super Bowl, that's your profit for the next 10 years. You know, you want to start small, advertise locally. You only need a 50,000, you know, maybe $20,000 advertising budget to advertise locally for the full year and get more sales. Okay. If you look at earnings per share per team, we have a new leader, and this is also generally earnings per share is going to most often be in line with, let's see, net profits per share, which we didn't get that to yet. Okay, so earnings per share, we have two companies who have the highest earnings per share, actually three companies, which is great. And then we have, you know, some companies that made a real good comeback in earnings per share. A few companies that went down in earnings per share, which should not happen. Investors really don't like that. And one company that's kind of flat. So this company here who is flat, this is an example of a team that forgot to do their round. So they didn't do their round for the simulation, so they were forced forward, which means that whatever inputs they put for the previous round get copied over to the next round, so you really don't make any progress. So don't forget any of the due dates, and keep it simple. Every Tuesday and Thursday, you have a round due for the simulation. Okay, so here is the market share. We really can't make much out of this, but so that's kind of a quick overview of the simulation. Now, if I go into the demo, let's see here. I have my own demo that I play. So if I go into the demo here, let's see, we're in year 4. Okay, so let's see. Just to want to look at the overview. So this is actually, I'm a year ahead of you guys. I'm playing the demo a little bit. And so if I look at my results, my year 2 compared to year 3. So again, it's that year over year change. I have a 39% increase in my revenues. I earned 39 points. I improved my quick ratio. With the quick ratio, you want to have, again, a higher, you want to move the higher points value, and I get 51 points for my quick ratio. I was able to increase my profit margins from 45 to 55, 24 to 37, 16 to 25%, so I earned points on my profit margins, which is going to get me points on my return on investment, return on equity, earnings per share, return on assets. Market capitalization is a factor of my stock price. So I did very well in a lot of areas. Where I did poorly is my forecast. My forecasts are coming in less than 100%. So this means that I have cars that I forecasted but didn't sell. So I lost points in my forecasting. And then I had this unexpected deficit here, and I lost 100 points for a deficit. Now, this 467 points, if this was a surplus, I would add 200 points to this. I could have got to 600 just by having better cash management. So what caused me to have this deficit? In production, I can see I have all this current inventory. These are products I didn't sell, I didn't make profits on, I didn't earn the cash on it, and I had a deficit because I over forecasted. So this is something that you want to be careful of. And if I look at my individual performance chart, I can see that, yeah, my sales have been increasing. My net profits have been increasing. Well, this round, year 2 they did increase, but year 3 they increased. And my profits versus sales have been increasing. And my stock price has gone up. Earnings per share have gone up. Points I've recovered from round 2. My points have done better. And you can see here that I'm meeting all my market potential, but I over forecasted. So I forecasted maybe 3,000 trucks, only sold 2,163. So next time I forecast, I gotta be a little bit more careful about a little aggressive forecasting. But what's nice though, when I do, when I see my production here, for example, I have current inventory of 851 cars. So in my sales forecast, when I do my new forecasting, and don't copy these numbers, I'm just throwing some numbers in here. So if I do, when I do my new, set up my cars for the new round, you notice that every round you set up, now the customer expectations are changing. It's becoming more expensive to make the car you want. So if you haven't done these operational, I'm just getting a warning there, hold on. Sorry about that, I had to clear up some space. These videos take a lot of space. All right, so where was I? Sedan. All right, so again, I'm just quickly putting some numbers in these boxes. Don't copy me. I see students doing that and then complaining they didn't do well. Well, I'm not even in the same round you are, so don't copy what I'm doing here. I'm just want to get these numbers in to prove a point. Okay. But again, when you are developing these numbers, you need to look at the student user guide, do practice rounds. You need to do your due diligence in setting the simulation up and doing your rounds and looking at your competitors to improve your performance. All right. Okay, so I just entered my sales data. I'm going to go to production. Okay, so in production, so if I want to build, I'm forecasting 4,000 vehicles. I only have to make 3,149 because I can retrofit and resell last year's inventory. So you always want to have, I feel it's always best to have a zero and this excess shortage. So why would I want to have a shortage of cars if I'm forecasting, and why would I want to build extra cars above my forecast? So always try to match this, because if you match this to zero, your pro forma financial statements will be correct. So that was why I had an unexpected deficit. All right. So I have it. I have to buy a plant here. I like how they give me a warning if I do something that isn't good and I get a chance to fix it. Okay. So now that I've done that, my pro forma financial statements will be filled in correctly, but I still I have a huge surplus here. And one of the reasons I have a big surplus is I didn't spend any money in marketing or equipment enhancement. And so marketing, as you know, takes a lot of time to think about how much profit am I making per car and what's my advertising budget. These are the range where most teams are expected to compete in. And in production, I need to think about how much money I have to make equipment enhancements, because these lead to a reduction in the cost of manufacturing the car in the previous round. So after I make my marketing and my production, then I can think about retiring some stock. So if I have some extra money, and look at my earnings per share here, see this $14? If I retire 10 million, now I have 14.58 in earnings per share, where before I had 14.31. That's how retiring stock reduces the amount of outstanding shares, which helps increase your earnings per share. Okay, so that's sort of my 15-minute video or less, 15 minutes or less, reviewing round two, giving you a couple little tips to help you do better. And remember that the biggest tip I can give you is that whatever your profit margins are, look in your overview to see what where your profits margins were in the previous round, especially your gross profit margin. And when you develop your sales, make sure your gross profit margin is above that. So see here, I have 41%. I left off an average of 55%. I'm going to have to make some changes to get to a higher percentage. Okay, that is all. Good luck on round three on Tuesday. And remember, if you're not happy with the results in the simulation, you should work on more practice rounds to, to test out your ideas, and go to the assessment tab and click on these little information to get ideas or direct information about how I can improve my performance and see how you rank among other players. Okay, thank you, and continue doing the good work in 330 Finance.